Since I have a finance YouTube channel, I like to see what other similar channels are talking about to see if I can get any inspiration for a topic to discuss or anything maybe I could throw my 2 cents in with. But sometimes I really do struggle getting some inspiration from that because it always seems like it's the same topics from the same people. Now, I don't want to call anyone out specifically, but I still see the same people talking about NEO. There's still some chirps about AMC. Occasionally, I still get to see the notifications for the tattooed chef. And people are still saying the market is going to crash after saying that for about a year now. Now, luckily for me, YouTube isn't my only source that I get this inspiration from. Actually, probably the main source I get my ideas from for topics is through podcasts or just the news in finance, which is where I actually heard about this semiconductor shortage going on. And that's what I want to talk about today. So let's go ahead and play the intro. Hey everyone, thanks for joining me today. My name's Matt, and as always, before we get started here, I just need to say, not advice, don't take it as advice. If you need advice, speak to a financial advisor. It's just for your entertainment purposes only, so do not make any investment decisions based solely on what I say here. Also, I think I need to clarify, the reason why I give that disclosure at the beginning of these videos isn't because I'm not confident in what I'm going to tell you during the video. It's just more or less out of habit, because when I worked in finance, I had to give every disclosure possible to make sure I was not giving direct advice to somebody. And technically, I could see where these videos would be construed as advice for, what stocks you should buy. So if this were to ever come back to me, at least that way I gave that disclosure. So somebody pointed that out in a video, and I just wanted to mention that is not why I give the disclosures, because I'm not confident in it, just because I'm trying to cover myself. Anyway. Also remember, if you enjoy this video, I hope that you consider hitting the like button for me. And if you haven't subscribed already, again, I just ask that you consider doing so. It's free, so you can't really get much cheaper than that. So some of you may be asking, well, what is a semiconductor? And to be honest, I'm not sure I fully understand what it is either, because that is not my area of expertise. But let me go ahead and read you this definition I found to see if that helps make more sense. Semiconductor, any class of crystalline solids intermediate in electrical conductivity between a conductor and an insulator. Semiconductors are employed in the manufacture of various kinds of electronic devices, includes diodes, transistors, and integrated circuits. So I'll be honest, that still makes no sense to me. I kind of have an idea on what they do, but I think more importantly, it's to understand what they're used for, and that I can give you some examples with. And you probably have more semiconductors in your home than you'd actually imagine. They're used in your smartphones, they're used in video game systems, those robot vacuum things have semiconductors in them, and they are becoming more and more prevalent in cars as cars also start to become smarter. Now, I'm aware there's way more applications for semiconductors, that was just to name a few, but yes, there are semiconductors used in so many other things. I wouldn't be surprised if they're used in things like refrigerators or ovens or anything else, so just bear in mind, they have a lot of usefulness, if that is correct English. And so now you might be wondering, well, how did this shortage actually happen? And basically, 2020 was the result of why the semiconductor shortage happened, because as people were not able to go into work, they were unable to produce semiconductors, but also as people were staying home and as we received stimulus checks, people were actually going out and spending more money on things like electronic devices. I'm sure video games were a pretty popular item back then because, well, if you're staying at home, it at least gives you something to do. So with truly economics at its finest, we had a major decrease in the supply of these, while the demand skyrocketed for products using semiconductors, ultimately creating this rippling effect that led us to today, where we have the semiconductor shortage. And a lot of companies are feeling this pain. Volvo is having issues with their production. Tesla's having issue with their car production as well. And I think Ford is also with their Mustang Electric, Mustang E, whatever they call it, Mach-E. Now, since these are in such high demand, almost like real estate, I think this sector is positioned to do pretty well over the next few years. But as I mentioned earlier, I really don't have a full understanding for what these do, which in turn means I don't know exactly who's going to be the best company for me to purchase if I'm looking for a semiconductor manufacturer. So, as always, when I'm unsure about an area or don't know which company is the best, I turn to ETFs. Now, today I actually have 3 semiconductor-specific ETFs that I wanted to share with all of you. We have, first one, SMH, which is the Van Eck ETF. We have SOX, which I believe is iShares, and then PSI, I believe, is Invesco's ETF. So as always, I like to just start with the expense ratio because I'd like to see how much I'd be paying to own this position. 0.35 versus 0.43 versus 0.57. These aren't necessarily astronomical expense ratios, but for some of these being a pretty passively managed fund, you would think they would be a little bit lower. Now, given that these are also in a highly niche market, then it kind of helps make sense why these might have a little bit higher of an expense ratio. Nonetheless, though, really, SMH and stocks are fine with me. PSI is just barely above range because I really like to keep my ETF expense ratios below 0.5%. Sometimes, again, when we buy like index funds from Vanguard, they're at 0.08%. So if you're wondering why I'm complaining over 0.07%, I hope that helps put it in perspective. When it comes to their AUM or assets under management, we have SMH with 5.93 billion and stocks at 7.08 billion, which is a pretty good size for an ETF in my opinion. Now, 652 million with PSI isn't bad either, but again, remember when it comes to ETFs, I like seeing higher assets under management because ultimately it helps with liquidity inside of these positions. Now, I put in this dividend yield more or less just to put it in there in case you were curious about it. But when I invest in a sector like semiconductors or tech for that matter, I'm not really looking for any kind of income from this investment because I expect these companies to still be in a growth phase. And usually companies that are growing reinvest the money that they would be paying out to shareholders through a dividend back into the company so that way they can ultimately grow, whether that be through new products, acquiring other companies, or stuff along those lines. With the number of holdings too, these are pretty small funds. Again, when we look at some of these index funds that I've had like VTI and VOO, those have way more positions inside of them. Now again though, these are semiconductor specific, so there's only so many companies that you could put inside of these funds. We have SMH with 26, stocks with 35, and then PSI with 31, which again, sounds small, but it's niche, so it kind of makes sense. But with these, the turnover rate is always something I want to take a look at. Now, I feel like I mention this every time I talk about ETFs, but it's just worth bringing up that the turnover rate in an ETF is not necessarily as important as it would be in a mutual fund, because turnover rate is, how they buy and sell out of positions inside of that fund over a specified time frame. And so obviously, if you have a high turnover rate, that means that the fund is probably experiencing a lot of capital gains tax. In a mutual fund, that is going to be passed down to the shareholder, but in an ETF, it is not passed down to the shareholder. So it's not that big of a deal when it comes to the tax liability of the turnover ratio. That being said, I still like to see the lower turnover ratio simply because I think it falls more in line with my overall investment objective. As somebody who's a long-term buy and hold investor, I like to invest in products that have a similar philosophy as what I do when it comes to investing. And so having a turnover ratio of 95% is way too high for me because that means they're not really holding on to positions for that long of a time frame compared to 14%, which is actually a pretty good turnover ratio to see inside of a fund like this. Lastly, when it comes to the beta, it's actually about what I would imagine for a sector like semiconductors because I would imagine it would be a little bit more volatile than the market itself, especially given that we're in the shortage right now, but it's not terribly out of whack. So I'm comfortable with these betas. Obviously though, SMH is the one that stands out to me the most, and I like that one because it is closest to the market, but still offers us a little bit of volatility, which might be able to interpret into gains down the road. Now, out of those three ETFs, the one that I actually decided to go with is the Van Eck one, SMH. And reason being is, yes, because it did have the lowest expense ratio, but it also had the lowest turnover, which is something I like to see, and the beta was closest to 1, which means it's the closest one representing the market itself. So those three factors are pretty important to me when I'm looking at ETFs. There's a few others that I like to take a look at, but for time's sake, I'm just going to kind of skip over that. So SMH is the one that I want to purchase, and also because of the top 10 holdings. As you can see from these top 10 holdings, there's probably a few names on here that you've at least heard of before. You might not know what they've done, but if you listen to any kind of finance news, I'm sure you've heard of companies like NVIDIA, Qualcomm, Broadcom, Texas Instruments. I was actually surprised when I saw Texas Instruments on here because I genuinely thought they just made calculators. I'm sure calculators is another example of something that uses semiconductors, but I looked it up. They are actually a semiconductor manufacturer as well. We have Advanced Micro Devices, more commonly referred to as AMD, not AMC, and Applied Materials. Now, there's a few other positions inside of here, but ultimately, when I was doing my research for which semiconductor stock I wanted to purchase, a lot of those that I just listed were the ones I was trying to take a look at. And again, rather than taking all of that time and commitment to look into every single one of those positions to add to a watch list, I figured I'd be better off just going ahead and buying a basket of them and purchasing this ETF. So I did purchase this one in the portfolio. The market just opened. It's 9:33. So let me get that pulled up and let's see how we're doing so far. And so far, so good. I bought 20 shares of SMH at 200 and what just happened? I bought 20 shares of SMH at $264, give or take. Last came in at around $267, which is giving us only about a $40 gain right now. But again, I'm comfortable with that. The market's only been open for 4 minutes. So $10 a minute is quite all right with me as an investor, especially with an ETF. And just to take a look at a few others that we have here, Blackstone is absolutely taking a lead here at a over $3,000 gain for us now. And I don't know if anybody else noticed this, but this is definitely the highest the portfolio has been in a while. So it's kind of funny when I hear people say that the market's still crashing, because this portfolio is actually doing pretty well for once. Of course, we still have a few losing positions here like Roblox and Jumia, but overall, I'm very happy with the way this portfolio has been performing for us. So you guys see all the positions. Feel free to pause the screen if you would like to. I don't really want to go through every single one of those positions, but I think having the semiconductor position inside of this portfolio can really go a long way for us. Would we maybe be able to get more gains or experience more growth in this if we went with just a single semiconductor company instead of buying a basket of them? Maybe, but we would also run the risk of not picking the best one. And that's the hardest part about investing, is trying to pick the very specific winner. I think Blackstone's the specific winner in this portfolio, but overall, when I'm not sure of an area, when I don't want to research 7 to 10 companies to try and make a decision and just buy one of them, that's where I love ETFs, and I think they could be a great addition to a lot of portfolios. So those are my thoughts on, I guess, an ETF, but for semiconductors more. So let me know your thoughts on this, if it's a topic that you've considered exploring yet, or if you were even aware of this shortage going on. Again, love having this discussion with all of you in the comments, so please leave any of your thoughts down below. All right, my computer's starting to act weird, so I'm going to stop myself here. If you like this video, remember, like the video and subscribe if you haven't already. I don't really know what people say anymore, if we're still smashing those buttons or whatnot. But anyway, thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I will see you next time.